Hello everybody, this is Gerard with FXLiveDayTrading.com, and today the video is about why most day traders lose. Now, I'm not going to give a glamorous video where I have a beautiful background. I'm driving a Lamborghini, I'm driving a Mercedes, and although I do have a Mercedes, I don't think that that's going to help make the point. In fact, I have two. That's besides the point. The point of the video is to get down, to get hardcore, and to talk about the roots of the problems that we experience as traders. Not to go over another strategy, because let's face it, strategies are everywhere on the internet. And why is it that there's so many strategies, so many ways of doing things, but yet there's some traders that are successful and they all have different strategies? So that tells me that not one individual strategy is responsible for success in trading. Now, with this said, I have to say that I do use indicators. So just because I use indicators, that doesn't mean that someone doesn't have a strategy that works and they are using zero indicators. They're using something other than indicators, is what I'm saying, to get the edge in trading. Or maybe they believe sincerely that what's driving their winning track record is indeed this strategy, so it becomes a self-fulfilling prophecy. Whatever it is, I don't know. But one thing I do know is that psychology plays an enormous part in trading. And we're going to discuss that. We're going to talk about that. And I'm going to get a little bit more into depth. I'll cover some charts today. But the main reason why we are here doing this video is to talk about why most traders fail at trading. And I know that there's a lot of other videos that are going to discuss this. I feel that I've never made a video like this, and I should, with 20 years of trading. And I began on Wall Street as a retail stockbroker, not as a quote trader. I wanted to be a trader, but they only had 2 traders, and they had like many brokers. The firm wants you really to be a broker first. So, but other than that, that necessarily didn't even help me to become a good trader. What helped me was understanding myself. So you can have a ton of experience in the financial industry and think that that's going to help you, but in reality, your day in and day out battle with trading, you can use to your advantage or you can use to your disadvantage. It depends how you're going to wage that war, how you're going to wage that battle. And indeed, it is a battle. And why is it a battle? Because when we day trade, we are trading against some very intelligent people. And we may sometimes fall for tricks in the markets. We may sometimes fall for news bits. That may be a trick in a way. A particular stop run in one direction, and then we get all excited and we're like, this is great, we just had a pop going in that direction. Then all of a sudden that moves around. Let's talk about that. Let's go over some scenarios where this may indeed happen. And I'll just give you an example, but I'm not going to diverge from our topic today. This is all going to complement our topic. We talk about, I just mentioned the stop run. It's very rare that we see a nice move without a stop run. Okay, this was a trade that I was in overnight. I did have a stop, My stop was 129.48. We did get that stop run, and I was very happy when I woke up in the morning to see that this trade was not stopped out. But I thought there was an overwhelming odds that it would get stopped out. I felt that the trade was going to move higher. I took the trade. The stop was a little tight. My entry was in the 64 or 65 level, so I had like a 20 pip stop. Great. So to my surprise, I woke up, we were right around 130. All right. Now, let's get back to what we were saying about why many traders lose. In the past, and I've been there just like many of you have, you're all excited and you're up in a trade and you're like, okay, I'm going to quickly take my money this time. I'm not going to let the market take this profit away from me. Well, remember what I said before. Sometimes you're going to use your battle at your disadvantage. Now, that's an example of using the market at a disadvantage. Here you are getting up. It just so happens when I got up, we were at 129.94. So let me just backtrack. This is the dollar CAD, by the way. 129.94, and I was right around, let's say, here. Okay, had that wick coming down, and I was saying, even now you get the temptation. It doesn't matter if you're trading for 30 years. It's an inclination. It's a temptation. It's just going to happen. So we did get the crossover in the 5-minute chart, and I said, I better get out. We're getting to that 130 level. But then my confirmation signal said, hold on, we're probably going to go higher. And I had to kind of battle that. And then I said, you know, let me hold on to it. My exit was 130.17 area on the next push-up. Okay, and it did end up coming back a little and going even higher. I didn't get the exact absolute top, but that's not important. What is important is following your criteria without allowing your emotions to get the best of you. Now, we've all heard that so many times, but the fact of the matter is, it is true. And faith comes by hearing and hearing and hearing. That is not something that I made up. I believe that is from the Bible. I believe it's Psalms. Now, I can't say I'm a Bible buff, but I can say that when people tell me, and someone told me that one time, something that really makes sense, I'm like, wow, that is so smart. And oftentimes, the more I listen, the more I hear these things, they seem to be coming from the Bible or from Psalms or something like that. So remember that. Faith comes by hearing and hearing and hearing. So if you are going to hear something like trading is psychological, you have to be sure to use a stop. You must be sure to watch this level. Whatever you are having that inner conversation with yourself today, it is true that faith comes by hearing and hearing and hearing. Okay? This is, in a sense, programming. You can have negative faith on yourself when you tell yourself negative stuff. Oh, now I'm going to apply this to trading. Every time I get into this darn thing, it goes the opposite way. You know, I've heard people say that. A lot of students will say things like that in the class. And then I'm like, well, I guess that's why they're in the class. And the thing is, they get into class and they want to learn trading. Obviously, if they're paying money to learn trading and they're not new at trading, then they've probably experienced some turbulence and they've probably lost. But what I find interesting is, despite the fact that they've been losing in trading, they come into class and they seem to think that they know everything. That is another very important thing that I want to discuss. Don't be arrogant when it comes to trading. Arrogant. Well, there's a certain level of confidence, there's a certain level of arrogance, In my opinion, arrogance is more of when you don't know something and you are thinking that you know it. To me, that's kind of like an arrogance, so to speak, where if you're confident because you've done so well, then you can hold your head up high and say, I'm good at this. It's a little different. However, what I've noticed in trading, even if you know what you're doing and you're doing so well and you start to get that confidence, and it's well deserved because you just had 5 winners in a row and you've increased your account substantially, that is the time that you lose your sense of humbleness, and be very careful, because oftentimes that's when you give money back to the market. So why is that? Why? Well, we begin to get overly confident that we know everything about trading. And why? Because we've finally proven ourselves. We've had 4 great trades in a row. And because of these 4 great trades, we feel that we finally got it. I finally mastered trading. Boy, I've made $3,000 in the last 2 weeks. Let's pretend someone's saying that. Now they get a full sense that the market is waiting for them to click that button, and then all of a sudden they're going to have a successful trade. It doesn't happen like that. If you had 4 successful trades, and maybe it was just more of luck, you know, just consequences of the direction that you were going, you know, the US dollar has been moving in a certain way and you've just been continuously just going that way. So it didn't take strategy. However, if you implemented strategies and those 4 trades were perfectly executed, and you know, you have to look back and know that those trades were executed for a reason. You waited, you watched, you chose your areas, and that's the reason why you won. Now, keep note of that and know that that's why you won. Don't get complacent to think that I won because it's me in the market. That becomes more of an ego thing, and that's when you're going to get destroyed. And it's happened to me many times. You get very confident, and then you're like, well, I'm doing so great. I'm driving a $100,000 car because I've been trading great. And there's nothing wrong with being confident, but once, excuse me, there you go. There's a good example. I was up way too late trading. When you get complacent and when you get egotistical, you tend to be a little bit less likely to exit a trade based on the fact that you're wrong. So if you're a confident person, there is nothing wrong with that. But know that the market is in control. Know when you're stepping out of bounds. Know your weakness, because we all have this same weakness. It's just a matter is one person's more profound or less profound. I mean, you still need a certain degree of confidence in order to click that button and take the trade. You have to be compelled to say, I believe this is going to work. And that takes a certain level of confidence. So watch the confident level, that it doesn't enter into the realm of egotism. And that is also important, and very, very important, to allow yourself to think properly when you are making decisions in day trading. So one of the main focus, and I'm going to stop this video in just a little bit, one of the main things that we can remember from this video, and I suggest that you play this often, is do not let your ego control your trading decisions. And one very important way, if you are susceptible to this, is to put that stop in and place your target. If you want to place the target, that's up to you, but put that stop in and shut that computer off. Now, your attachment to the emotional moves of the particular pair of Forex or the futures or the stock or the commodity or whatever it is has been severed. And at that point, you are just working purely on the strategy. So that is the solution. I've outlined the problem, and that is the most effective solution. Okay? Now, if you feel that you want to go ahead and not take that approach, then I suggest you go ahead and exercise caution and just keep those positions to a minimum. But you're still going to have to step away if the ego is getting in the way of your decisions. Regardless. So one way to do that and not be so concerned about the trade is to have a very small trade. If it's a fairly sizable trade, a big trade, then just make sure that that stop is in there. Now, the stop, when it gets hit, means that you were wrong. That's right, and it's okay to be wrong. I mean, if you are a famous baseball player and you have a 300 batting average, that's pretty darn good. And that basically means that 30% of the time you're getting a hit. Why are we so obsessed with winning when in the end it's about making a profit? I hope this has helped you, and I look forward to making some more videos. To check out my website, it's fxlivedaytrading.com, and I offer one-on-one consulting to get to the root of the problem if you are indeed experiencing problems in trading. And I'm a 20-year veteran and I trade daily, and in fact, as I'm talking and doing this video, I am in a trade, which I am watching in the corner of my eye. Everybody, have a great one.